calculate the actual tax you owe, generally you'll use some kind of tax table or tax formula contained within a table. In particular, these tax tables are going to differ depending on what status you're under, what status you file under. So for instance, in this first example, we'll look at someone who's filing under a single status. So the tax table I have here relates to those people who are filing under a single status. So this is specifically for 2022. The tax tables will be different each year based on inflation. In the homework related to edition 1 of our textbook, the tax brackets that you're given relate to 2018 because that's around the time the book was written. So the values would be a little bit lower because of inflation over the last few years has increased things. The IRS does adjust these values every single year. All right, so Mira's tax income is $83,000 and she's going to file again under single status. So we're going to use this table. The way you use the table is that the first column in the table relates to her income. And so we're going to look up her income in this first column. So her income is $83,000 and this is her taxable income, not her gross income, taxable. So we're going to look up her taxable income and it would fall into the range on the third column, row down between $41,776 and $89,075. So $83,000 is in there. So this tells us where to look for the formula, continuing across the row, for calculating her tax. So the formula we're going to use for her tax is $4,807.50 plus 22% of the amount that she's earned that's over $41,775. Now, how we calculate the amount over that is we subtract her income and that number they say we want to be over. So she's going to be charged 22%. I'm going to write that as a decimal. For anything over that amount, I just want to subtract those two values from each other, 83,000 her income, taxable income I should say, and 41,775. And notice that 41,775 was basically the low end of where we were in this this tax bracket for where her income falls. And we'll come back and talk about that in a minute, but she's only going to get charged 22% on anything that's over than that boundary for this tax bracket. Now we could calculate all of this, just throw the whole thing in with parentheses into your scientific calculator, but I'm going to take a moment here and show it out so that we can emphasize one thing, which is that that 22% is based on the amount that's over that 41,775, which puts you into the 22% tax bracket. So that's $41,225 that's over the last bracket. And we get charged 22% on that. So that's about $9,000 in taxes that comes from this 22% tax bracket, $9,069.50 specifically. And then I add those together and I get that she owes $13,877 altogether. Again, you can throw that all into a scientific calculator to get that all at once, and in fact, that's what I recommend generally. I showed it out this way because I wanted to really emphasize a couple of things here, that 22% is based on the amount of money over the last tax bracket. And let's go back to those other tax brackets that came before the one I highlighted. The first tax bracket was from 0 to 10%. Sorry, $10,275. And that is charged at a 10% rate. So anyone who makes something, any money at all, is going to be charged 10% on anything that is up to $10,275. Even billionaires are charged 10% for their first $10,275 in taxable income. Then we have 12% charge on anything between $10,276, going a step up, and $41,775. So we are charged 10% on the first amount of money we make And then the next group of money we're charged 12% on. And then anything beyond that, going up to 89,000, we're charged 22% on. And it continues. This graduated tax percent continues to increase as you earn more money. But it only increases for the amount that you're over the previous tax bracket. So you're not getting charged, for instance, 35% if you earn, say, $500,000 a year. You're not charged 35% for all of that $500,000. You're only charged 35% on what is over $215,000 approximately. So this is called a graduated tax bracket or tax system. And everyone is charged initially 10% and then 12% and then 22%, etc. So in this case, Mira was charged that 10% of her first $10,225. So if we actually work that out, 10% of $10,275 means that she was charged $1,027.50 at 10%. And then she was charged 12% for the difference between $10,276 and $41,776. That's actually $31,499 that is in that second tax bracket charged at 12%. That comes out to be $3,779.88. If you add those two together, what you'll get is $4,807.38. And if you look at that first number that we were using in our calculation, $4,807.50, that's basically, if we round to the nearest 50 cent, that was the calculation for how much she got charged at 10% and how much she got charged at 12%. So the number that you see initially before the plus in all of these tax formulas relates to how much you were charged in tax for the previous tax brackets. Okay, so $4,807.50 was the amount you were charged at 10% and 12% altogether. So instead of having you do the separate calculations, they just have you go ahead and they just give you what that value would be. And it is rounded to the nearest 50 cent. So 38 cents is closer to 50 cents than it is to 0 cents. So that's why it rounded up to 50 cents. So they always round up to the half dollar. So that's a little bit about how this tax table works. Okay, it's a graduated tax table. And again, you're only charged the percent on the income that would be in that level in the tax table. So her tax that she owes during the year is $12,877. Oops, I said $12,000. It's $13,877. Sorry about that. Let's take a look at what her effective tax rate is. Now, the effective tax rate is the percent of her taxable income that is paid in taxes. So again, it's the percent of her taxable income that's paid in taxes. So her taxes was $13,877, and we want to know what portion or percent of that related to her taxable income. Her taxable income is $83,000. So if we divide these two to get the percent, divide and then of course multiply by 100, we get a percent of 16.7%. This is her effective tax rate, and what that relates to is that it is kind of another way to think about it. It's her average percent she's paying. It's a weighted average. She's paying 10% on part of her income, 12% on another part of her income, and 22% of related to the rest of her income. This 16.7% is basically a weighted average of what percentage she's paying overall. So if you think about kind of a way to average this 10%, 12%, and 30 and 22%, that's what we mean by effective tax rate. Effectively, she's paying 16.7% of her taxable income in taxes. Let's do another example. Here we have Jordan's taxable income as $180,000. And let's say that Jordan files under head of household status. What I have here is the head of household status tax table. Let's work out what their calculated tax would be. All right, first we need to find $180,000 in our table. So 180,000 would actually be several, in fact, 5 entries down in the tax table. It would be between $170,051 and $215,950. So if we look across in the table to the formula it gives us for this tax bracket, I would be needing to use this calculation. I would use $33,148 plus 32% of the amount that's Jordan's income is above $170,050. So I would subtract $180,000 and $170,050 to work out what the difference is between how much Jordan is over the last tax bracket. All right, so let's throw this entire calculation into the calculator. Instead of doing it piecemeal this time, let's just work out the whole thing. And we get $36,332 in tax. That's what Jordan's tax would be, $36,332. Jordan's effective tax rate, though, remember Jordan was being taxed 10% on part of their income, 12% on part of their income, 22% on part of their income, and 24% on part of their income. So their effective tax rate is going to average that up in some ways. Now, it's a weighted average, so it's not a precise average. So what we do to calculate the effective tax rate is we simply take the tax that Jordan has to pay and we divide it by their taxable income. So if I do that, $36,332 divided by $180,000, we get approximately 20.2% as an effective tax rate. So as a weighted average, Jordan has paid about 20.2% in tax.